Ska jag säga något? Hör ni mig? Ja. Och nu hörs ljudet.
So dear all, warm welcome to this year-end report presentation from AFRY. My name is Jonas Gustafsson, CEO of AFRY, and with me I have also Bo Sandström, our CFO, who will join me in a minute. So again, thank you for being here. We will have some 20 minutes of presentation and then of course open up for any questions. So I will start then with on the Q4. And of course, what we saw in Q4, you have seen it in the report, a continued strong demand, driven from the industry, energy segment, but I also say stable demand in the infrastructure. Of course, some pockets in the real estate where we saw some weaker demand, but in general, good demand, and that was reflected in our growth. We delivered 20% growth in the quarter. 11 adjusted organic, ending up at 6.6 billion. I would say that's the highest level we have had in any quarter in this company. So that's a real highlight. EBITDA 578, which was 15% growth compared to last year. So a good development, and the margin ended up at 8.8%. I would like to highlight that in AFRY X, we will come back to that, we have now, I would say, reposition that business. So we did some write-offs of software products in the quarter, and we should now be finalizing AFRY X. And of course, we continue now to leverage from the strong demand that we see, and cost control and pricing will be key also moving forward. But in general, when you look on the demand side, it was a really strong quarter. Few words about 2022. I would say 2022 was also a year with a lot of uncertainty, of course, but still we ended up with a year with very, very strong demand, and total growth for AFRY was 17%, and adjusted organic growth ended up at just about 8%. So also when you look historically, that is probably the strongest we have had in one year. EBITDA 1.8 billion, ending up at 8% in margin. And in the year, we have announced and concluded a cost-saving program, target a lot in infrastructure division. We also concluded 4 acquisitions throughout the year, adding 600 million on top line. And we have also then announced and agreed to divest our Russian operation, still waiting for approvals, but that process is ongoing. So a few highlights from 2022. Then, market, and I already mentioned the market, and you probably have seen it, that the market and the numbers we see are very strong. Again, coming back to 11% adjusted organic growth. Again, this big transformation, green transformation in industry, but also energy, drives a lot of demand for our services in AFRY. But also in infrastructure, except a few pockets, we have seen a solid development. And that is also reflected, we will talk about it, that our order stocks are on all-time high levels. Performance in our 6 divisions. I would like to start then with process industry, energy, and our management consulting business. They all deliver strong growth and good margins. Moving into infrastructure, I would say I'm pleased with the growth, but in infrastructure, we had a margin lower than what we hoped for. And there's a few explanations. In Finland, we did an acquisition in last year, and just in the integration of that company in Finland, we had a significant cyber attack. We have been working with that throughout the fall, but that has affected us significantly during the quarter with really low utilization. So the delta in Finland is significant, affecting infrastructure. We are also using more sub-consultant than normal in infrastructure, and that is also having an effect on the margin. With that said, we still have work to do to improve our margin, but these two, especially the Finnish one, was one big explanation that we see in the performance in the Q4. In industry and digital solution, we had one project write-down in a bigger project that affected the performance, but here the growth and the market is good, so we expect good development moving forward. And finally, AFRY X. We have now, throughout, I would say, most of the second part of 2022, adjusted our position in AFRY X, and we have now cleaned out our software products. We had to do a write-down in the Q4. We are now done. So moving forward, we will and we should expect good development on AFRY X. So 3 divisions very good, and then we have had some Q4 effects in the other ones that we are not super pleased with. But in general, moving forward, I feel that we have also improved in many areas. I want to highlight as we have strong order books, order backlog. 3 projects that we received. One is actually in AFRY X, and here we have together with SL, we are then chosen to be the digital partner for building out a system for traffic information. So it's a really cool project, also in the core of what we as AFRY can do with our infrastructure knowledge, but also the fact that we have a strong position in digital. So this one goes into AFRY X. Second one, liquid wind. And this is a project where we support the build out on a factory in Sundsvall. And this is, of course, probably you follow liquid wind. They are focusing on the shipping industry and where they will supply green electro fuel. So it's also a very interesting project for us moving forward. And then finally, Stora Enso in Oulu in Finland. Of course, this is in the core of AFRY, where we will support Stora Enso in a conversion project where they will use the machines for renewable packaging. So all these 3 projects are, I would say, a symbol of digitalization, but also the green transformation that we are working on. And just before handing over to Bo, just highlighting sustainability. And we as a company, we are ranked high or very high in many different sustainability rankings. And I would like to highlight the last one, CDP, where we as AFRY really received a leadership score based on our climate work. So we are really proud of this, and this is important for us moving forward. So with that said, I will welcome Bo Sandström on stage to take us through the financial part. So it's all yours, Bo.
Thank you, Jonas. So I will cover the main financials for the quarter, starting with sales. So total net sales in the quarter, 6.6 billion, more than 1 billion higher than Q4 last year. So this was then the second quarter in a row with a 20% total growth compared to last year, and more than 10% adjusted organic growth, this time 11.3%. Growth was then driven across our segments, solid demand, and it was supported by price increases. This quarter, we estimate price increases to be around 4%. We see a continued very strong development of the order backlog, just as we have seen last year. That continues in the quarter, and we finalize or we end the year on a record level in terms of order backlog. On the EBITDA side, as Jonas said, we came out at 578 million for the quarter, 15% higher than last year, and margin ended at 8.8%. Despite being marginally lower than last year, what we can see in the fourth quarter is that we managed to take sales growth to EBITDA in a better way than we've seen the previous quarters. We're still challenged in getting full scale effect of the growth, but better than what we've seen in the previous quarters. 3 highlights in the EBITDA development for the quarter. As often in Q4, being a year end, we have some items of one-off characteristics. From a group level, we see that they net out in terms of total EBITDA, but they, of course, affect the divisional performance in the quarter. We have a positive in group common that is netted out by negatives in IDS and AFRY X. Second part is that, as Jonas described, we see a continued increased use of sub-consultants to, in a sense, facilitate or meet the high demand that we see and cover the high growth. That also this quarter pressure the margin development, and this is particular for Infra and IDS. And thirdly, also like Jonas said, we have a weak performance in Infra Finland, affecting the utilization in the quarter. So looking then at the development by division, we see, as we've seen before, we see consistent strong growth across the divisions, with AFRY X then as the exception. So AFRY X was affected in the quarter by the product portfolio revision that was finalized, resulting in a write-down of approximately 11 million and a lower EBITDA margin to follow. Looking at the two biggest units or biggest divisions, infrastructure and IDS, they both deliver margins of approximately 8% in the quarter, both then affected by higher use of subconsultants. Then we have the weak EBITDA margin in Infra Finland, which explains the deviation to last year fully from Infra. And we have the single project write-down in IDS. Leaving those three, or looking at the remaining three, we then have process industries, energy and management consulting on very strong growth levels, but also on EBITDA margins in the quarter of above 11%. We're very happy with their performance during the final part of 2022. In addition, you should consider a somewhat higher level of cost allocation from group to division than last year. And we expect Group Common now to be stabilizing at approximately 1% of net sales on an annual basis in net cost. Finally then, looking at net debt development, we ended the year with a net debt of 4.6 billion, sequentially down from 5 billion in end of Q3. And with the positive development of the EBITDA, this then brought the net debt to EBITDA down to 2.3 times, below our target level of 2.5 times. Operating cash flow in the quarter was positive, but not as strong as an exceptionally strong Q4 last year. Primarily driven by then the negative working capital effects for the very high growth that we had, that we have seen this year, both in Q4 and also in previous quarters. Liquid assets and unused credit facilities totaled at above 4 billion at year-end. Finally, then the board proposed a dividend of 5.5 Swedish kronor per share to the AGM. And this would then correspond to approximately 0.3 times on net debt to EBITDA. With that, I leave back to you, Jonas.
Thank you, Bo. And just to wrap it up, moving forward, of course, we see a continuous strong market. So for us is to take all advantage to strengthen our client offering and continue to work with interesting assignments and projects. So that's one thing. But of course, cost control and pricing, because, you know, as we said, we follow the market closely. And there are, of course, some clouds also out there. But in general, on the numbers now, they are strong. And then, of course, to attract talents and continue to develop our employees to be able to take on these super interesting assignments and projects that we see coming up. And then we continue to do those focus investment that we need to work on our operational platform. So with that said, I will just finally want to welcome you all to the Capital Markets for AFRY. We will have that here in Solna in our head office on March 16. So you will get an invitation and we hope to see you here. So with that, we will move over to Q&As and I will have Bo back with me here and answer any questions that you might have. So please, Ebba.
Yeah, we open up for questions and as usually use the function raise your hand if you have a question and don't forget to unmute. And we take the first question from Johan Dahl at Danske Bank. Please go ahead, Johan.
Yes, good morning. Can you hear me? Yeah.
Yes.
Yeah. Hello, Johan.
Excellent. Hello. Just a few questions. Starting on you talk a lot about the increased use of sub-consultants. We can see also that you clearly increased the number of FTEs year over year, fairly well in line with your organic growth. What's the dynamics actually behind that happening in Q4?
Yeah, I think one thing in infrastructure is that clearly we have seen that the strong growth that we had specifically now in infrastructure in Q4 led us to needing to use more sub-consultant than we normally do, because we are not scalable as big in some to handle this. So we had to bring in more sub-consultant, and the same was valid for industry and digital solutions. We always have a sub-consultant structure we work with, but in Q4, also based on slightly higher sick leave, more like we had last year, and a bit higher attrition, Johan, led to, for us, that we had to use it a bit more than normal.
Is attrition, is that increasing for you guys as you exit the year?
No, not increasing, Johan. I think it's still on high levels, potentially stabilizing, going down, probably as an effect of the general, I don't know, market and so on. But it is still slightly higher than what we have if you look back, a year or two. So that together in December, a bit higher attrition, a bit higher than normal sick leave, and a very strong sales, and led to those effects that we talked about.
Also on AFRY, it sounds as if you're doing some efficiency initiatives here entering 2023.
Yeah.
Or how should we read it? Because the number of employees, I think it was up sequentially.
Yeah.
I mean, usually cost out is personnel to some extent. Can you just explain what your plans are here for 2023?
I will do it quickly, and then we will talk more about that when we meet here in Solna in March. But just to simplify it, we had an interesting product portfolio of software products that we have looked through and developed over the year. A couple of them we will continue to work with, smart forestry, but many of those product initiatives we have actually cancelled because we have had challenges to commercialize them. So I would say, Johan, the simple explanation is that AFRY X that we are pushing for now is driven towards more a strong service offering business, with a couple of software-related products as support. And we have actually done that clean out, you could say, throughout 2022, and we took the last write-off in Q4. So now we're done, and then we expect and we will push for good development moving forward.
We'll get back in line. Thanks.
Yeah, thanks.
Okay, we take the next question from Johan Sundén at Carnegie. Please go ahead, Johan.
Yeah, good morning, and thank you for taking my question. Two questions from my side. First is just on the Finnish cyber attack. How come that you don't comment on it in the report?
Yeah, I think we comment, and I mean, what we saw is that the attack happened during summer, and then we have been working with a lot of mitigations throughout the last 6 months. And I think right now we commented the fact that we had problems with the utilization in Finland in the report, but we didn't go into the fact in the report that the original reason for that was a cyber attack that we have been fighting a bit with over the last 6 months. And now we had actually to redo some of the drawings due to that, and that came up now in the Q4. So that's the reason, basically. And what we see is now we will have a bit lower utilization in the beginning, but then we will be out of that. That's the plan moving forward. So that's the reason why we have not specifically commented on that it was an attack on one of the acquisition. It was publicly known during the summer, but then we have been struggling to get back with utilization in Finland.
And how should we view the situation? Is it all solved now, or is this something that will be a drag also the first half of next year? Or?
I think we will probably see a bit low utilization maybe in beginning of this quarter, but then we will work ourselves out of that problem. So it's not a drag-on problem. We expect that in Q1 we will see an improvement in Finland moving forward.
Great. And a second question on the cash flow and the working capital. And Q4 usually are a good cash flow quarter for you. And now we're not seeing the natural kind of working capital swings as last few years. And when I look into the balance sheet, we see that receivables rising quite more faster than current liabilities. Just to get the sense what's driving this, and because if the growth, organic growth is the reason for the working capital build out, then those two factors should kind of follow each other, right? Or how should we read?
Yeah, I mean, you should read it. You should read it in. I mean, it's always, of course, multiple things affecting the cash flow. What we did experience in Q4 was that we had a strong cash flow, also supported by operating cash flow, but not as strong as we saw, an exceptionally strong Q4 last year. This is then driven primarily by the growth, but it also, if you look on the collection side, we can see that in comparison to last year, it was somewhat weaker. But that is, in that sense, that is not the driving factor, and that's something also that we can see in beginning of January that is only related to, in a sense, our collection numbers at year end, and not the driving factor for the cash flow as such.
And is that the calendar driven, or is it some specific client that has been slowing down their payments, or?
No, it's no specific clients. It's in that sense distributed.
Okay, great. I get back in line. Maybe I have a follow-up later on.
Okay,
Thank you.
thanks.
Okay, we take the next question from Dan Johansson at SEB. Please go ahead.
Thank you so much for taking my questions. I think a few of mine have been answered, but had two more that I would like to ask. And first one on how large was the price component out of the 10% organic growth here, and also a follow up to that, how you think about price increases into this year, and your feeling about your clients' willingness to accept further price increases here. So that was my two questions. Thank you.
Thank you. Price increase in the quarter was approximately 4%. So in line or marginally lower than what we saw in Q3, but still at a healthy level. And I think to your second question, we we're of course anticipating a need for further price increases going into the next year. Our expectation is that we are very well prepared for it, but as always, it will be a challenge, in that sense, to continue price increases, moving on. But we've prepared as good as possible to continue that positive development going into the next year.
Perfect. Thank you so much.
Thank you.
We take the next question from Raymond Ke at Nordea. Please go ahead.
Yes, hello. Two
Hi.
questions from me. First one, last year Omicron was negatively impacting sick leave, if I recall correctly, and capacity utilization was down this Q4. If we exclude Finland, is it still an positive development or negative development on capacity utilization?
You talk about infrastructure division, I guess then.
No, just overall on the group, like in total. If you exclude, now we know that Finland, of course, was impacted.
Okay.
But
Yeah.
If you exclude Infra Finland and the effect thereof, utilization is in line with what we saw last year.
Great. And could you talk a bit about the cloud computing investments now going into 2023 as it continued now in Q4? What should we expect there?
We should expect, this is then related primarily to our ERP implementation. We should expect similar levels going into 2023 as we've seen throughout 2022.
Okay, perfect. That's all from me. I'll get back in line. Thank you.
Thank you.
Thank you.
Okay, we take the next question from Stefan Knutsson at ABG. Please go ahead.
Yes, good morning, Jonas and Bo. I
Morning.
have a question regarding the write-downs in IDS and AFRY X. Can you put them into perspective versus the positive effect you had from the sales in Vietnam?
Yeah, I can provide, overview, and I think you can find a lot of it, in the notes in the report. The revenue effect from the sales in Vietnam is approximately 30 million. And the write-down in AFRY X, approximately 11 million. And as I said, they all net out, in total. So approximately 20 million, is a fair estimate for the project write-down in IDS.
Perfect. Very clear answer. And then also follow up on price increases that was talked about earlier. I mean, 4% in the quarter. Do you think that is enough to offset the inflationary pressure next year? I suspect that wages will increase more than they have done so far in 2022 next year.
I think that standalone. I think if we can continue at a 4 or 5% level, I think that would be sufficient. Then of course doing that quarter by quarter going on, that is the challenge that we're facing.
Thank you very much. That was all for me.
Thank you.
Thank you.
Okay, next question from Fredrik Lithell at Handelsbanken.
Thank you. Good morning. Thanks
Morning.
for taking my question.
Thank you.
I had on the other side of price increases, you also then have salary increases. So if you could describe the wage drift that you have experienced, if it has turned more elevated, that's the first one. And secondly, do you feel that it's moderating due to maybe that consultants are sitting more still in the boat, that they are not moving around as much, or your personnel turnover is coming down? People are watching the news as I am, I guess. So two questions in one, maybe.
Yeah.
Thank you.
No, a relevant question. Thank you. Well, as we have seen throughout the year, we have seen an increase in people turnover, and that leads to the salary drift, if you want to call it, or salary inflation. So you lose an employee, and rehiring is normally you need to pay a bit more. So that is really one reason why we have seen throughout the year salary inflation, because of course now, so that has affected the salary cost more in 2022 than we have seen in many years. Of course now, as we said, we push a lot for pricing or increasing the fees to our clients, and it's all about selling value. So right now I feel that we are netting out a lot of that with pricing, roughly. But moving into this year, or we already, of course, the kind of salary agreements in the Nordics, Sweden, Finland, will be very important for us, of course. So it is something that we are watching very closely, because that's really when the salary starts to move, that affects us, of course, a lot then. Right now we are kind of balancing it out, pushing prices, but it will be very important moving forward how the salary agreement process in the first quarter will turn out in Sweden and Finland, as an example.
Thank you. Maybe just a follow-up on that. I guess you can't give us sort of a hint on where these negotiations are moving, but do you expect that the salary agreements will be shorter in length compared to the old one that was, I think, 2.5, 3 years?
Oh, yeah, now you're moving into speculations, and of course I'm very much following that, so I can't say. I mean, there are different, I mean, the different parties have started to kind of put their different, on the table, and we are just, so it's very difficult to say. But it is something, one thing is, it's not only the consultant business like us or people-driven service company, but also the industrial companies have a really close eye on that one. So it will be very important that we are coming out of that in a good way. But how it will be, I wish I would know.
Okay, thank you very much.
Thank you.
Okay, I think we have a follow-up question from Johan Sundén at Carnegie. So please go ahead.
Okay. Yeah, and just going back to the cyber attack, you maybe mentioned it, but please repeat it. If so, was it present in the Vahanen acquisition, or is it wider? Was it wider in the entire Finnish group?
It was the Vahanen. And the unfortunate thing is that it was just in that intersection when we were about to integrate the company into the AFRY framework, and that created that problem. So it's very isolated on Vahanen, but since that's a significant part, it affected the infrastructure division. So it was not wider spread, but it was related to the Vahanen acquisition.
Perfect. I'm happy there.
Yeah.
Okay. We might have a follow-up question from Raymond K at Nordea. If that's so, please go ahead.
Oh, sorry, I forgot to lower my hand. I didn't have a follow-up question.
Okay.
It happens all the time.
Okay, so we try with Stefan Knutsson at ABG. Do you have a follow-up question?
Actually, I don't, but I can just ask a question regarding cost others than salaries. Is there some efficiency gains there? We saw, for example, Sweco yesterday decreasing their rental costs. Do you have similar projects that you can execute?
Yes, I believe we can, and as you indicate, typically outside of salaries, real estate or lease cost is of course a big factor for us. Then those are long-term agreements, but we have a wide network of leases, and we focus on working with that portfolio. All the time. It's a big factor for us, and I believe there are opportunities, but they will come, at a point of time where we can execute that on a lease perspective on those long-term leases.
Perfect. No further questions from me.
Okay, thank you.
Thank you.
Okay. Fredrik Littell at Handelsbanken. If you have a follow-up question, please go ahead.
Yes, I actually did have a follow-up, so thank you for that. Maybe if you could have put a few words on your, balance sheet situation and the gearing that came down a little bit from Q3. If you have any refinancing scheduled for coming up for this year, and when are you prepared to sort of turn more active on M&A, given that you have a roof of 2.5 on your gearing and so on. So just if you could color it a little bit, would be interesting.
Yeah, we, as I said, we have a clear target level of 2.5, and right now we are a little bit below, which is always nice. That is providing room for us to be active in the M&A arena, which we always are. Currently, there's no strategy for us by itself to move lower than our target level. But of course, it's always nice to build up some headroom to the target level to make us even more able, in a sense, to be active in the M&A arena.
Okay, thank you.
Thank you.
Okay, we take the next question from Johan Dahl at Danske Bank. If you have a follow-up question, please go ahead.
Yes, please. Thank you so much. Just to understand your mindset heading into 2023 here, because you were fairly clear on the fact that you were discontent with profitability in the first half of 22, and I think you came up with some tangible measures, to drive efficiency in the group. Sort of what we've seen so far is clearly you've delivered on those savings, but efficiency in terms of billing ratio have continued to slide, and you're meeting a fairly tough situation now going into 23 here on leasing cost, on calendar, etc. I'm just curious, what levers are you pulling, and what new initiatives have you produced to actually get margins to improve, because they've slided for a couple of years now in AFRY.
Yeah, well, you're right, and I think in 2022 we concluded that cost program, and it was actually effective in infrastructure. We reduced FTEs on index side. We have also had AFRY X in 22 that have actually burdened us with this. We are working with a lot of levers into 2023. Because you are right, if you look on the margin development for the last couple of years, it's been slipping. We know where it is because we also have part of our business that is actually strong and healthy. So I can say we are not launching a cost program today, but we have a lot of activities to drive margin development across the group, specifically in the infrastructure division, where we have been on too low levels for some time.
But is there a discussion in the group? I mean, growth is strong, right?
Yep.
There's always, those are you weigh growth against margins.
Yep.
Is that a discussion that's on the management agenda at all, or how you look on that?
No, of course it is on the management agenda for sure. And as Bo said, I mean the growth is really strong, and we will do our utmost to turn that growth also to margin leverage. And we see an effect on the EBIT in absolute terms, but we are not satisfied with the effect it has on the margin. So yes, it is on the discussion, because of course the good thing is that with that strong growth, we need to find ways to tweak the offerings, the execution, the bidding process to margin development. So for sure it is on our agenda. And when you look on 8.8 in the fourth quarter as a solid number, it's a stable number, slightly lower than last year. Infra was a bit of a disappointment. We know where we had a problem. Finland is one explanation, but it will be a strong focus in 2023 for sure. And you are right. Yeah, no, and you're right that we are meeting inflation and cost increases. We talked about the lease agreement for offices. So of course we are trying to pull every levers we can moving forward.
From one thing to another, what do you estimate the calendar effect? How negative was that in Q4 in your books?
I think we did disclose it in the notes. So we
I'll
would
take it in the notes then.
Yeah,
That's
it's
great.
somewhat negative. Yeah.
Thanks.
Okay, so we have one hand left, and it's Stefan Knutsson at ABG. If you have a follow-up question, please go ahead. Okay, it's gone.
No, sorry, I don't.
No, okay. So we don't have any more questions.
All right. But then again, thank you for taking the time to listen. We hope to see you here in Solna in March 16, and then we will continue to discuss many of the questions that you have asked and hopefully give you some more light into it. But again, have a great Friday, good weekend, and thank you for listening.
Thank you.